The December jobs report is a huge disappointment. That's our top story today on the Wall Report. I'm your host, Greta Wall. The Labor Department released its non-farm payrolls report for December this morning, showing the U.S. economy added just 199,000 jobs last month. Now, that was less than half expecting, and it could actually be even worse. The survey was conducted in the week starting December 12th, before the spread of Omicron picked up steam going into Christmas. That means future revisions could show an even smaller hiring number in the final month of 2021. Excuse my dog. But as the headline number sharply missed expectations, the unemployment rate did fall more than expected. That number dropped to 3.9% last month, beating expectations for 4.1%. And although that might sound like good news, that's not necessarily the case. A lower unemployment rate with weak hiring signals that people have left the workforce and are no longer looking for a new job. And that was evident in the labor force participation rate last month, which was unchanged at 61.9%. Now, that number represents the percentage of the eligible working population, those 16 and older, who are actively working or looking for work. A stagnant labor force participation rate, coupled with slower than expected hiring, equals a smaller workforce. And although wages did rise more than expected, up 4.7% year over year, that's still lagging behind inflation at 6.8%. So it really doesn't help as much as it sounds like. Now, the disappointing jobs data comes as the Fed has fully shifted its policy focus away from the labor market and onto inflation. The stock market has been hit hard this week by expectations for the Fed to wrap up its asset tapering, hike interest rates, and begin its balance sheet reduction all in the next few months. But could a weak labor market change that outlook? Probably not. The bank has admitted that inflation is running way hotter than they forecast and is likely to stay elevated for an extended period of time. So they're probably going to stay aggressive on inflation no matter what the jobs picture looks like. And that expectation is continuing to push Treasury yields higher today. The 10-year yield rose above 1.8% today, the highest it's been since before the pandemic. Now, Wall Street is continuing to pull back amid that rate spike. All three major indices are on track for a losing week to kick off the year, and the tech sector has been the biggest loser so far. For the first time in 5 years, the Dow Jones is outperforming the NASDAQ year to date. Now, that reversal comes as high-growth tech stocks that surged during the pandemic are being decimated by the risk-off sentiment that's sweeping across Wall Street. Other high-risk assets like crypto are also feeling the pressure this week. Bitcoin has slumped to its lowest level in 3 months, trading around $41,000. The world's largest cryptocurrency is down more than 13% in the last week. Ethereum has meantime plunged more than 16% in the past 7 days to around $3,100. Just in the past 24 hours, the global crypto market cap has fallen nearly 5% to $2.06 trillion. But one meme stock is bucking the trend today. GameStop shares are up big after the Wall Street Journal reported the video game retailer is moving on plans to launch an NFT marketplace. The Journal says the company has already hired more than 20 people to work on that launch. The report claims the marketplace is expected to sell virtual game goods, including character outfits and weapons. But GameStop itself has not commented on the news, so this is all just a speculative increase in the stock. But back to the jobs report as we wrap things up here. What do you think of today's numbers? Personally, I think it shows a workforce nearing its peak after COVID. Many people have left the labor market altogether coming out of the pandemic. And whether that be people retiring early or previously maybe working mothers who are now choosing to stay home or maybe being forced to stay home. I'm interested to see how this shift impacts things in the long term and whether what the U.S. considers to be full employment will actually change, as it seems our labor force is shrinking. I'll see you all back here for the Wall Report next week. Have a great weekend.